Now for Bloomberg First Take, we're joined by Bloomberg's Clementine Fletcher and Luke Cowan. Clementine, I'm going to pick on you here because you're social velocity. So you follow Twitter. That's what you do for a living, is you follow Twitter, things like that. What do you make out of these earnings?
Well, I think one of the things we have to look at is obviously the contagion that's coming across from Facebook earlier this week. A story that everybody's obviously been watching. It fell the most, I think, ever. It's the biggest rout we've seen in today ever. And a lot of that was to do with the daily and monthly active users as well. Like, are people going to Facebook? Are they using social media platforms in the way that they should be? So obviously that's something that might be impacting Twitter right now. But the great point that Alex made is obviously that Twitter moves a lot on earnings days. So, you know, I think when the market actually opens, we'll get a little bit more of a kind of view of what Twitter's really doing. But, you know, there are continuing issues with how people use the platform, the issues around privacy, around, you know, all the issues with Trump talking about perhaps the shadow Republican blocking. I think these are all things that perhaps will be kind of rounded up when we start getting on the investor call.
Yeah, and look, this is clearly a company in transition, as we've known. It was really, remember, on death's door not that long ago. And they're changing the way they're engaging, including Bloomberg having TikTok. You know, we're doing a lot more video. They're doing deals with the sports leagues and things like that.
Yeah, so with Twitter, I'd like to kind of distinguish one thing between Twitter and Facebook. You know, this seems to be positive more so on the financials. So to like paraphrase a social network, you know, who needs eyeballs? You know what's cool? Money. That's what's happening with Twitter right now, and it doesn't seem to be getting the love. But there is this idea that both for Facebook and Twitter, there's somewhat foregoing, you know, call it sleazy revenue, is what one analyst told me, and that's, you can think of that as capital investment in their platform, whether or not it plays off for the longer haul, having people around. And I think that's the issue with Twitter and Facebook right now. And for the larger FANGs, is that they're becoming more mature companies, and we're really starting to see top-line growth stall out.
It's a great point. I feel like we've been waiting for that to happen. There just had to be this like macro factor of privacy that really sort of had a catalyst for that. And to that point, I mean, they said their monthly active users were down because they had to prioritize the health of the platform. They're dealing with the GDPR over in Europe. They also were dealing with abusive conversations on the platform, the SMS carrier issues. So there is like a fundamental shift. I think the question becomes, Clementine, is have the markets calibrated for that?
Absolutely. I mean, with Twitter, one of the issues is also how they are growing outside the US market. And this is a story across most of the social media networks, too. I haven't had a look at their international numbers, but obviously GDPR in Europe would have hit that.
Revenue there is up 44%.
Oh, there you go.
That's
it was
pretty really
good.
Japan, though. Japan did really well.
OK. So that, I mean, you know, outside Japan and Europe, that's a huge Twitter market. It'll be interesting to see in the next quarter how that goes. There's always this discussion about these kind of extraordinary items whenever a company comes out with these kind of things that they give not as excuses, but as kind of reasons for perhaps misses. So in some ways, I'm looking forward to the next quarter to see what's going to be happening then.
We'll have to wait 3 months for that. But just to recap what's going on with Twitter here, to report on what we're doing, they came out with their earnings and they had a miss on the monthly average users, and they also were down a bit on the daily average users. They came in at 335 million as opposed to last quarter 336 million. They said that was on purpose because they're improving their platform, and they also said they're going to have mid-single digits of millions decline for the rest of the year. At the same time, they outperformed on both revenue and on earnings per share, and the stock in the pre-market is down.